Nona is back this week with business news. Nice to have you back, Nona.
Thank you very much. Nice to be here.
Surveys found most Kiwi savers don't take much interest in where their money's been invested.
I know, go figure, huh? Because there was a survey, and we've had a lot of conversations about this. One of them was about responsible investments. Should they be in funds that excluded things such as tobacco and arms?
Bradley did a lot of work on
yes,
that.
exactly right.
Yep.
Well, it turns out a survey's been done, and yes, 44% of respondents, are concerned about where their money goes, but 56% really don't care at all. In fact, 16% didn't even want to know where their money was going, and 40% didn't care. And only 41% of the respondents actually preferred to have their money into funds which had environmental and social concerns.
16% didn't want to know.
They didn't want to know. No, they didn't even want to know.
Let's sell them some moon rock, Nona.
It seems very interesting that you would put your money into and not even pay any attention whatsoever or care to know where that money's going.
Who did the survey?
This was a Westpac survey, and they interviewed 1,000 Kiwi savers.
And so does that absolve Westpac from ethical investment?
Well, no, actually, the whole point of the survey was to show that they have these funds available and were people interested in them. It turns out an awful lot of people aren't.
Yeah.
And what does that mean? It's kind of an interesting thing. If you are a Kiwi saver and you're thinking you don't care, maybe you should go to that Kiwi saver tracker we talked about that the FMA with the Financial Markets Authority is offering up, because you really should be paying attention to where your money's going for the long-term savings plan that you have. And okay, so maybe you don't care if it's in a socially responsible fund, but you should care that it's in a fund that's giving you some kind of a return. Surely, come on.
You should care about all of it, Nona.
Well, it's your funds for long-term savings, right?
We must love one another or die, as Auden said.
If you say so, John.
No, it was Auden. Right, tech companies have turned a corner in delivering profitable growth. What does this mean for the market?
Well, that was interesting. So we did a roundup of companies that reported in the last sort of period, ended just in November. So these are companies that had year ends or half-year periods ending September 30th. Quite a lot of them were tech companies, young tech companies, including not so young ones like Xero, for example, that reported a maiden profit, which was a big deal. It was, $5.4 million. Not a lot of money, but it was a turning point. And others also indicated that they're going to be returning profits, which is, great news for their shareholders after a very long time of, making lots of losses. Well, in any case, we talked to some experts, and one of them said, well, even though all these tech companies are now starting to make a profit, it's not going to encourage a whole lot of new tech companies to list, because it's quite difficult to do so in terms of the requirements and the cost involved, and also shareholder reaction. We've talked about this before. Shareholders tend to really mark down companies that don't meet their expectations. So right now, the NZX, that's the New Zealand market operator, is reviewing listing rules, and there is some kind of hope that maybe that review will show a way forward for these smaller companies that really do struggle to get a foot in the door and then to grow profitably without necessarily good shareholder support. So I think times have changed. I think shareholders, according to some of the analysts, have a better sense now of what to expect from these tech companies and to be a little bit more patient with them, perhaps, but also for the companies to manage shareholder expectations in a better way. Yeah.
Marcus, what did they do?
Well, actually, ours was slightly weaker, down 4 points to 8,185 dollars, trading at 68.6 US cents, 90.2 Australian and 50.9 pence. But that's mostly because the US dollar has gone up with Donald Trump's tax package looking more likely than ever to make it pass a vote. So really good for corporates in the United States. They're going to reduce taxes, corporate tax, 35% down to 20%.
Nona Peltier, beside me in the Auckland studio. Thank you very much indeed, Nona.